Hey there, Russell traders. David here of TradingFibs.com to bring you the Russell recap for June 26, 2013. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only to support your knowledge in the market and see what's going through my head on any given trading day. Always please make sure you have a solid trading plan and never move your stop when placing a trade. Well, folks, let's get right into it. Our four major indices, as you can see, pretty much chopped it up around the open range, offering several opportunities with a breakout to the upside on the ES and the YM, downside just slightly, and NASDAQ really just chopping it all the way across inside. The Russell was the only one that really gave a nice drive down to the daily gap, offering a nice EMA crossover and entry. Possible re-entry of taking out on a stop, and then crossover to the 25-minute open range high, 25-minute open range low, and then letting go at the end of the session on very little volume, actually bringing this to the upside. As I stated in the trading room, I just didn't see this keeping up here. Really, the trade of the day was down to the daily gap, and you can get the link in this blog to my first trading video of the day, which took you through a detailed analysis of the play-by-play on how I stayed in that. Took a really wide stop for the day up here at the 25-minute open range, and I knew price. I didn't know price, but everything that said that it looked right was headed down to the daily gap for the close. Market internals was supporting that move, as we started with a really high tick and really came down, really chopping it up, split hairs, greens and reds for the most part of the day. AD line was just a decliner. Once we came underneath the pivot, headed down to zero. Market breadth offered that little opportunity during the afternoon buying spree there on little no volume to tank at the end. It was the trend that was in an overbought position above 3 opening the day that sent this a little bit south. So using my market internals with my support and pivot lines and my EMAs is what keeps me in the trade. As we could see here on my daily support resistance levels, the daily R1 and R2 lines, daily R1 here, daily R2 up here. Price never got down to the daily pivot. Daily gap was the low of the day as far as support and resistance line. So we have our first line here at 960.9. So 960.9 was one of the first lines to contend with on the way down, as either taking ticks off or re-entry. So go ahead and place that there. Taking a look here at the Russell on the 1 hour open range. We have a 1 hour open range here at 959.6. So a 959.6 gives me my 1 hour open range low. And I'm also looking at the daily these are Surrey range S3 down here, which actually was a little bit of a bounce. So that was 958.5. So here we go. We got a line here, 958.5. You'll see when we put this all together why this all makes sense. Okay. And then when we're looking at our Camarilla lines, price action is not able to break above H4 with a momentum move to the upside. It actually comes down here to about the same price as 959.8, which is Cam L3. 959.8. 959.8 is our Camarilla L3. So on our 25-minute open range, when we take a look at the momentum outside the range, our first entry on the Heiken Ashi, we'll get to that in a minute. But above weekly pivot and fib line would have been the lines to break to the upside. Price action never broke up that high. So we come underneath the 25-minute open range, could have been a first entry. Here we have 961.4 to contend, 960.1, 959.8, and 958.5. As you can see, price kind of held up here. Price bounced back up knowing that these two lines were here, I decided once I had entered the 25-minute open range trade underneath, placing stop up here at the, giving it to some room to breathe up here at the 25-minute open range low. Eventually, price came all the way down to the daily gap down here, which was at 957.2. So lining up my 25-minute open range, again, you can capture all this in my video in detail why I decided to stay in this. The Heikin Ashi was really the momentum indicator here. And again, a really nice ride up overnight. When you look at if you just trade simply on moving average crossover, it doesn't matter if it's a 534, 850, 1020. I mean, everybody has different kinds of combinations. I've felt that the exponential 534 is more conducive to day trading, and for shorter term on a 10-tick range chart, get better entries. I still use my 25-minute open range as a discipline, as I've seen more often than not, price just chop up inside the range until momentum's ready to take it. There's plenty of chop that happens inside the range day in and day out that keeps me out of that. So do I miss some of these longer terms? Sure I do. But again, if I go back a couple days, which would have kept me, I'll keep that for the other day. But it keeps me out of the sideways chop. But EMA crossover, entry under the 25-minute open range, or there are three crossovers for the day. So if you just entered on the EMA crossover, these Heikin Ashi bars keep you in the trade. The 500 to the 34, 5 crosses over again. You could have traded this to the upside on very little volume, back inside the range, and then back down to the downside at the close, and you would have had 3 trades for the day. And removes the emotion. Take off targets on the way down. As far as I was concerned, I waited till the open range. I took 2 trades here to the downside of the daily gap, and I had a wide stop up here, as you see in the video. But my daily gap, as I had stated in the trading room, was the bottom target that I was looking for. I actually would have liked to seen it go down to the daily pivot, but we didn't go down that far. We had a 38% retracement here on the Fibonacci from the high to the low at the time. And let's see if we can put that up there again. So take it from the high, bringing it down to the low, which we were looking at. As you can see, a 38% retracement. I might have made a mistake in the video. I might have said 50%, but 38% retracement, and fib target number 1 it hit, and a little bit beyond. Looking at, let's actually look at the 2 of the charts together. We could see that one of the reasons you might not have taken this first trade is because if you following the 4 EMA, which is the 5, 13, 21, and 80, as you can see here, the 5 is underneath the 13 and the 21. The 5 comes under the red line here, which is the 80, but the 13 and the 21 are still above. And so the best momentum move is actually here at 7:45 Pacific Coast time, when the 5, the 13, the 21 are all underneath the 80. You're all underneath the 5 is underneath the 34, and boom, we go right down to the daily target. Load up the contracts, take them on the way down if you need to, or just drive it down to the daily gap, which was the target. All of these Heikin Ashi candles were all sell signal. And then, as you can see, we just chopped up along the side here. Price action came back up. So why would I wait? You could have simply entered on the 5 on the crossover to 34. If you had waited a little bit longer, we would have waited to probably about another hour before you would have gotten in. But then all you had was sideways action here, condensed. And then 534 came under again. The 5 came under 34, but you did not have the same scenario on this. I'm telling you, on days when there's a nice trend, these 2 charts will line up like you've never seen before, and that keeps you in the trade for as long as it does. Little volume day, there was nothing that was going to tell me that we were actually going to keep going higher. The market indices, as you can see, started to break up above the 25-minute open range, but they all failed and actually came all the way back down. So what are we looking at? Well, here's our daily chart. I got 2 major open gaps. Folks, open gaps get closed eventually. I don't know if it's now, I don't know if it's next year, I don't know if it's in 10 years, but they all get closed. We almost closed it actually last week. I'm looking for a price to come down in the weekly S1, close this gap here, And I know there's different opinions on what that gap is and what's the gap zone. And as long as price broke into that, I follow you need to come down all the way to the close of this bar, which was 936.4. I believe price action will eventually come back down to 936.4. We have an open gap to the upside as well to close, so I'm looking for the low of this, which would be 981.2. So there's my range for the week. That's my outlook, even though I don't like crystal balls. That's where I stand, and I'm sticking to it. So that wraps up the daily Russell recap for June 26th. Not an awesome day, but money in the bank. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My trading mantra of know one thing. I know the Russell, that's what I trade. Probably don't have enough computer screens to look at other stuff. So, if you trade the ES or Apple, YM, indices, markets, just stay disciplined. You can find me every day on Twitter at Trading Fibs. As always, I leave the crystal ball to the experts. I only trade the charts that are in front of me. I always place a stop with targets off to the downside or upside, depending on the trend. That's it for the Russell recap. Have yourself a Blue Zone day. Take care.